Genius bans yields. Is Ethereum DeFi the new passive income king? Let's explore and dive in. Genius Act and Ethereum DeFi. Long-term network impact and market outlook. The Genius Act creates regulatory clarity but limits stablecoin functionality by banning yield. This ban indirectly benefits Ethereum DeFi protocols by channeling yield-seeking capital into decentralized apps. Financial institutions may enter compliant DeFi. Meanwhile, global users may favor offshore coins offering yield. Risks like regulation, smart contract vulnerabilities, and reliance on treasuries. How the Genius Act indirectly strengthens Ethereum's position. DeFi activity surges, ETH becomes more deflationary, and Layer 2 scaling supports growth. With increased demand from tokenized RWAs and institutional products, ETH is evolving into a core infrastructure asset. Let's talk about the Ethereum's price performance over the last 5 days and 6 months, which showcases the cryptocurrency's characteristic volatility and resilience. In the short term, ETH has staged an impressive rally, breaking out to multi-month highs on strong volume, a clear bullish signal. Over the medium term, Ethereum has recovered from a sharp correction earlier in the year, indicating that the fundamental demand and investor interest in Ethereum remain strong. Key support and resistance levels have guided price movements on both timeframes, and the recent breakout above $300 suggests that Ethereum may be entering a new bullish phase. For crypto enthusiasts and traders, the analysis highlights a few takeaways. Ethereum's market can shift rapidly from bearish to bullish, or vice versa, so flexibility and risk management are important. Support and resistance levels identified over longer periods often play out in shorter-term price action, underscoring the value of technical analysis. Volume and volatility are key confirmations of trend strength. The current rally's sustainability will be bolstered if high volume and healthy volatility continue, whereas a drop in volume could signal a potential consolidation or reversal. Investor sentiment, as gauged by momentum indicators, is extremely bullish at the moment, but also in overbought territory, which means a short-term pullback or consolidation would not be surprising, even if the longer-term trend stays positive. Looking ahead, Ethereum's ability to sustain above the $3,500 level and eventually challenge the 4,000 resistance will be a critical test. If it succeeds, it could pave the way for further gains toward new all-time highs. On the other hand, failure to hold support levels could lead to a correction that tests the bull's resolve. In either case, the past 5 days and 6 months have set the stage for what could be an exciting period for Ethereum. Active traders will be watching the interplay of short-term price action with the longer-term trend, using tools like moving averages, support, resistance levels, and volume analysis to navigate Ethereum's next moves. In conclusion, Ethereum's recent performance demonstrates a market transitioning from recovery to breakout. The 5-day surge amplifies the bullish narrative established over the 6-month recovery, but also serves as a reminder of the inherent volatility in crypto markets. By keeping an eye on both the trees, daily price swings, and the forest, bigger trend, investors can better position themselves to capitalize on Ethereum's opportunities while managing its risks. Thank you for being part of this exciting conversation. Remember to subscribe this channel, comment, like, and share. Thank you.